We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up MTB. We are in the 12-month time frame. Price action, last candle to the right-hand side is a bullish green candle, spiked down to that low area of support. Price action is within that second last candle, so that market is consolidating. Could be coming from an area of support from that third or fourth, or just identifying a reversal from that second last candle, with I think also the sixth last candle identify two spike ups to the high, which can probably drop that market. So we do have price action overall, higher highs of structure, price action overall, lower lows, followed up with the midpoint. Also adding second level highs, third level highs, and fourth level highs. Current price is sitting at 153.81. So if price work its way up, it can tag that resistance line in blue at 171.55 before tagging the midpoint within that area of price, nearing the numbers of 161.89. If price drops down, it can tag that white SR line as support, which would be near the numbers of 148.47 before tagging the midpoint between price and numbers we just read off, very small at 151.69. And also if price drops down to another level, it can tag that support line, nearing the numbers of 127.00 before tagging the midpoint within this area at 137.74. So if price pushes up from this area, let's see what market's coming from. So we did receive some consolidation before market broke out. Looking at the main pushes, the areas that were respected, market respected the full break and the retest at the midpoint. Market pushed up from that area. Look like it's from a double bottom, first, second, third, fourth. So we do have that first push, retest, second push, retest. We're looking for the market to push out that early area for that third time. But we can see price action did spike up to the high with that second last candle. So this candle right here and that sixth to last candle may be identifying a reversal. Price action is at the midpoint of that area. So if it declines and drops down, market's coming from that first, second, third, fourth. Market broke the fourth level highs, came back to retest with price. If it follows up with another bearish candle, or if this candle switches colors and drop down, we'll see that double top and retest. Or this market can consolidate within the last 1, 2, 3, 4, 5, 6, 7th, and some eighth the last candle in the market. We could keep receiving that bounce up and down, maybe towards a high of that area, or may just be at the low of that area. But overall consolidation. Working our way down to the 6-month time frame. So price action 6-month time frame reading as a bullish green candle. It is consolidating on that fourth level highs. So if it respects it, we'll see respect at this level here. There's also patterns inside patterns. If we're paying attention to where price is coming from, it's coming from that low. And why? Because we did receive that break retest and the market spiked up, came back to retest again with the second last candle. If it pushes up, we can see that W formation for that first, second, third, and market pushes up. If we get the engulfment towards price action, towards the second, third last candle bodies, and fully break out those wicks. Also, there's another structure in here. If you look at it as price in second being the right shoulder, this area being the left shoulder, we have a head, and we'll have an overall head and shoulders pattern, or overall triple bottom, 3 pushes down to that bottom. Walking down to a 3-month time frame. So price action 3-month time frame reading that still as that bullish green candle, spike down to a low with the price in second. So that area is being respected. So we're looking for price to break above and engulf the second last candle. It does have a ways to go. So you'll look at the market as in areas. So price just broke below the low, price is headed to the mid, and we want to see it do a break and retest at the high. So far we did receive a break, a retest, a push, a retest again. So we can see that W inside W is in that area. So just within that consolidation, we do have that W formation. But if it drops down, where's price coming from? It's coming from the high. At the high, we did receive green candles coming up. So it's that first, second, third, fourth. That will be the break. Price action will be the retest. Follow up the bearish red candle coming down from that double top. Walking down to the monthly. Price action, same candle, bullish green, spike down to a low. Second last candle, drop that market. Market just always identifying is that market broke and trying to come back into that area, which it did. We see it broke the resistance line. Now turned to support. So we're looking for a break and retest to see if that market is going to make up to that midpoint. Working our way to the weekly. So price action, we did receive the retest twice. With price in second, third last candle was a break, so it's looking like this. We do have that first, second, third. Oh, skip that. First, second, third. So it's the break with the third last candle, and market pushed up. So price action came for an extra spike down towards that overall low of the price second, third, fourth, fifth, sixth last candle in the market. So you can look at it as an incline W, as we just identified, as that first, second, third, fourth, or you can look at it as overall first, second, spike down to a low. Market's coming out for that double bottom. Working our way to the daily time frame. Price action on a daily time frame. So market's getting choppy. Bullish green candle. It did draw back a little bit, so it looked like it tagged something. What it tagged is that midpoint in that market, in that area between the white SR lines. We'll add that now, and we can see that the market identified the break, the retest. Market broke the next level, came back to retest this previous level. So we do have price action engulfing the last second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th last candle in the market, which pushed that market up. But now price action, we're looking for price to engulf the previous side to push that market up, and it's having a hard time closing out against that bearish red candle. So what we're looking for is price to see what's going on in that area as we walk down further. Could be consolidation, and we know that price action is near our SR line. So let's take a look at what's going on. On the 4-hour time frame, we can see price tag something in that area. So we're going to take our blue SR line, going to go a little bit above, a little bit below, and now let's just take a look at what happened. So we identified earlier that that market did broke that SR line. Now we can see it as a zone. Market broke retest, pushed down further. That's the third leg, and came all the way back up for that fourth leg touch. And now we're looking to see what's happening in that market. Near price action is reading as a retest, so if it can push up further, it could be identifying a drop down if we receive a bearish red candle, start working that market down to the levels of mid or the low. But if it's respected, we'll see that pattern form. So multiple pushes to that bottom once that market broke and retest. So it could be identified as that first, second, third, fourth, retest one. Price action will be a retest if it follows up with a bullish green candle, unless it drops down for a bearish red candle. It could still catch the momentum off that midpoint. So you can see that first, second, third, fourth, retest one, and retest and still push back up. Working our way to the 3-hour time frame, consolidation. So we're really looking for a price action body to engulf the third to last candle in the market. So when a market starts breaking and pushing up through that area, it'll actually go in the zone. So then you can wait a little longer until that market breaks out that zone to the top to retest to push up further. Because after it breaks into that zone, it may follow up with another consolidation or some type of doji for a retest. So on the 2-hour time frame, we have third last candle spiked up and market just work its way sideways. So we can see it's having a hard time. It didn't break through, back through, down towards that third last candle and dropping down. It's staying at the high area, just consolidated sideways. So all we have is a market spiked up to that high and just consolidated sideways. So we are looking for it to break into that zone or break back down through the levels of the third last candles at the high, the mid, and the low. Okay, guys, this is Cam Jones, FX Daily Analysis. Thank you for watching and thank you for your attention. MTB stock.